Hey, it's Mike here with emini Underground, and today we're going to start to touch on the physics of trading methodology and try to give a 30,000 foot view of our thinking on how we've used physics as the underpinnings of a framework on top of which we can build our indicator package. Now, if you've been following us for very long, you realize we have a affinity here for using physics as a tool, and we've written some things on quantum mechanics and chaos theory and just general physics and how we think it pertains to the way that actual people react when they're in the market. Now, that said, I am by no means, I'd like to preface this whole thing by saying I'm not a physicist. Um, but I do think that it works nicely as a way to better describe and understand the ways that I see the market. So let's start off with some basic quantum mechanics, if there is such a thing, and in particular, wave-particle duality. Now, wave-particle duality basically says that mass is energy and vice versa. There's also mass energy equivalence, which states mass is a property of all energies, energy is a property of all masses. And Einstein basically had said that all particles also exhibit the properties of a wave. So what does this mean for trading, and how does it look on your charts? Okay, so I realize that I am just kind of running roughshod over the physics behind this, and that's being done for a reason. This is not a physics course, this is not a physics video, and I don't really intend on making you sit through an entire physics lesson. It is, on the other hand, a trading video, so let's try and get into some charts here, and I do want to show you, and I'm going to try my best to kind of illustrate what I mean by this wave-particle duality and how it pertains to our charts. So this is a daily chart on the ES continuous contract. And we're going to, I've circled this, this point right here on this bar. Now this bar on this chart is just 1 point, and it represents the day of January 8th, 2013. Now the point I circled is for a different reason, and I'll show you that in a minute. That is at 1446 is the low side pivot on this bar. So what would happen if we were to take this 1 point, this one particle of this entire universe, which is the daily chart in the ES continuous contract, and inspect it a little bit further? What is this 1 point made up of? And so we'll go down to an hourly chart. And here is our ellipse, and here is our bar. Here's the point on the low side. 1446 actually took place at 12 o'clock noon Eastern Standard Time. But that one bar, that 1 point, is actually built of the entire day of the 8th. So this entire wave is what actually has constructed the 1 point on that last chart. So this entire area is basically this 1 point, and we can keep doing this again and again. So let's go down to, I don't know, 15 minute, and let's do a little looking around here. Boom. Okay, so there is, and now it's enormous, but what's nice is that this point, the low, is still 1446. And that kind of brings me to my next point and how we're going to use market mass and how we define market mass within our system. So this raises a question. On that last chart that we were looking at, you kind of start to get the feeling that we're just going further and further into a wormhole, where the market is constantly moving and energy is just persistent. And so when that's the case, what the real question becomes is, where exactly on my chart then am I going to be able to put my finger and make any sort of educated decision on where I'm going to enter or exit the market? And the answer is in areas of equilibrium. What is an area of equilibrium? Well, I'm sure you've come across this in other parts of your trading training, whether they're called market structure highs or lows or pivots, which is something I use quite often, or fractals. And fractals is what I want to discuss today. What is a fractal? A fractal is a mathematical set exhibiting self-symmetry, and they appear the same or very similar from close inspection as they do if you step back and look from far away. So this fern is a classic example of what a fractal is. If you look at each individual piece of each petal, I don't know, do ferns have petals? I'm not sure. That will look the same as the petal itself, which then also make up the larger piece of the fern or petal. And it doesn't matter if you're looking at it from very close up or from far away, it looks the same. So that's essentially what a fractal is. So I think it's important just to show briefly here that the use of fractals in trading is certainly not something that is unique to us at emini Underground in any way or to our physics of trading methodology. Do a quick Google search for fractals in trading and you're going to come across something very similar to this. And it states a bearish turning point occurs when there is a pattern with the highest high in the middle and two lower highs on each side. A bullish turning point occurs when there's a pattern with the lowest low in the middle and two higher lows on each side. And there's a nice little diagram here, pretty simple, of what these look like. Another way that I thought was good to kind of picture what a fractal is just to hold your hand out in front of you. If you're holding it with your palm forward, your pinky and your index finger are the preceding lower highs. Your middle finger, the top of that, is the highest high, and then the top of your index finger and your thumb are the following highs, lower highs. And if you were to turn your hand upside down, that would be a downside pivot or downside fractal. Now on your chart, we were showing these upbound and downbound pivots, and these are essentially your fractals. You have to have at least two preceding and two following lower highs on an upside and vice versa for a downside. But how this pertains to fractals in the mathematical sense, and as you can probably remember from what we were doing just a couple minutes ago, is that they appear the same no matter if you're looking at them from far away or close. If you remember where we were going down time frame after time frame and explaining how each point was made up of various points and movement, that same point was there whether you were looking at it in a 15-minute chart or whether you were looking at it on a daily chart. Everything else was kind of moving around it. And those become your areas of equilibrium. Those become the areas where you can start to hypothesize and make a decision on what it is that you want to do in the market. And that's exactly what we do with our market mass indicator. That is the first essential building block to start making our decisions, and everything else is kind of built off of that.